Every time this indicator crosses this line, Bitcoin goes parabolic. The most recent crossing took Bitcoin up 70%. And before that, we saw triple and quadruple digit gains. The infamous crypto bull run has begun, and Bitcoin is on track to reach 100,000 by year end. I'm going to share with you my expertise, which is combining technical, macro, and fundamental indicators that point to life-changing gains. So first, let's start with the technicals. The relative strength index gauges momentum, and looking at the monthly chart, we see Bitcoin crossing into the breakout zone, where it tends to go parabolic for the next 12 months. But the key is to zoom out. We're not looking at the daily, not the weekly, but the monthly chart. Next, we have the break of the flag pattern, which represents the battle between the bears and the bulls, with the breakout revealing the bulls in control. Next, we have the rubber band theory. Price has been consolidating in this pattern for about 9 months. And like a rubber band stretched to its limits, you get the snapback. And that snapback can be also observed through the steepening of the moving averages. When a short-term average creates vertical distance from the long-term average, it tells us the trend is turning up. Now, the reason this is so predictive is because we see multiple technical indicators screaming yes. And this is all happening as Bitcoin pushes above all-time highs, which will trigger the fear of missing out. Never chase, wait for the pullback to the base. Okay, let's move into the macro. Before the 2008 financial crisis, the Fed's balance sheet was around $900 billion. It later quadrupled after 3 rounds of heavy quantitative easing, reaching $4.5 trillion by 2015. The supply of money exploded along with the price of Bitcoin. And for some reason, the month of November seems to be the time buying pressure starts to accelerate, breaking new all-time highs. Now, whether it's quantitative easing, rate cuts, or fiscal stimulus, the expansion of the money supply pushes Bitcoin higher. Massive money printing equals massive losses in purchasing power, inflation, the devaluation of currency. Bitcoin was created to preserve this purchasing power. And this is why the price of a home increases in dollar value, but decreases in Bitcoin value. So Bitcoin reflects liquidity, which means the acceleration of credit injections, rate cutting cycles, and presidential cycles drive Bitcoin higher. Now let's talk about the fundamentals. One of the biggest obstacles for crypto has been the regulatory uncertainty. And with a Trump White House, friendly regulation could establish the US as a global leader in the crypto industry, reducing barriers to entry and facilitating institutional investment. And this is why BlackRock's Bitcoin ETF flows are starting to hit all-time highs, reflecting the acceleration of institutional adoption. Bitcoin ETFs as a whole have now attracted more than 23 billion inflows since the launch in January, with more than 870 million coming in one day. I am sounding the alarm. The crypto bull run has begun.